sterling has been falling massively against the dollar. The backdrop for this is that, as we've shared with previous video we made, which I'll link to below and above, the Chancellor in the UK released a mini budget with massive tax cuts, with essentially no plans for how these were going to be funded. A lot of the funding was really around borrowing billions and billions of pounds to fund it. And the market has not received this very well, which has led to not only an economic crisis, but also a currency crisis here in the UK. The pound dropped to as low as $1.035 to a pound. That's the lowest it's been for over 50 years, and then gradually recovered. And then, but more generally, there's a lot of volatility of the pound against the dollar. And tied to that, the Bank of England's been making various moves to increase interest rates, but their moves came before the Chancellor released the mini budget, which has led to a series of events and a lot of uncertainty in the market. So today we want to explore what impact the declining pound against the dollar is having on our investing, our savings, our spending, our borrowing, all those various things. We're going to just share some thoughts with you guys.
So why is the dollar so important?
Right, really, really good question. The reason the dollar is so important is because the dollar is seen as the global reserve currency. It's essentially the currency that people rush to in times of uncertainty. Okay, and a lot of products, things around the world, gas and things like that, are priced in dollars globally. So where the dollar strengthens against other currencies, it causes inflation in those currencies, essentially, because things become more expensive. So that's the main reason why, the dollar. That's the main reason why the dollar is a reserve currency, and it's actually a pretty important currency from a world perspective. Do you want to speak to us about the impact of this on spending? Like, what does this mean for everyday people in the UK and beyond from a spending perspective?
So from a spending perspective, it just means that anything bought overseas will now become more expensive. And those high pricing will then feed into the pricing that you pay for locally at the till, further driving up, inflation. And, this will affect many things like holidays, for example. So traveling to the US will now become more expensive. However, people coming over from the US to the UK, it would actually be cheaper for them. So it just requires us to be, it requires us to be more organised. We'll need to shop around for deals from the perspective of exchange rates, for example, and just looking for a cheaper deal when you're planning to go abroad.
Cool. And I'm just going to speak now to borrowing, okay? Because a lot of people have, whether it's borrowing, on-plan borrowing, whether it's borrowing via mortgages being the key one for a lot of people right now. Now, obviously, as we mentioned earlier, with higher inflation that Mary mentioned, driven by the decline in the pound, will come the need for the Bank of England to increase interest rates even further. In fact, they've released statements saying that they are prepared to act almost much more aggressively from an interest rates perspective. The last increase we had was 0.5%, but we probably expect them to increase interest rates by at least 0.75% or even at least 1% in their next update. And there might be an emergency hike, although I don't believe they've ever really done that, or maybe we've done it once before, but the next update will be in November. But the point about borrowing is that most people are on fixed rate mortgages. So those people who are on fixed rate mortgages, about 75% of them will not be affected now. However, there will be, as soon as they come out of their fixed rate deals. Around 2 million people are on variable rate mortgages, and those people will now, if they're not doing so already, should be out there trying to get fixed rate deals ASAP if you can. Although, as we've seen recently, even news this morning, that a lot of mortgage companies are pulling mortgage deals, again tied to this great uncertainty that we are facing at the moment in the UK. But you want to speak to savings. What impact is this decline of the pound against the dollar having on savings?
Yeah, so given the fall in the sterling against the dollar, that would obviously increase inflation, and it means that the savers are now going to become poorer. Which is sad, but in real terms, the savings will be worth less as a result due to the inflation. So leaving your money in the bank now is just not going to cut it, as you will just lose more of your purchasing power in the long run. So although the Bank of England plans to ramp up the interest rates, it will be quite a while before those rates feed into, closing the gap. on rising inflation.
Inflation.
So it's a good time to really shop around for the best rates and consider like a fixed rate option, like deposit account. We saw a fixed rate.
Yeah, we did some searches. What kind of rates did we see?
So we saw some fixed rate deals with Virgin Money at 3.52%, for example, and there were others that included Yorkshire Building Society at 3.5%.
And that's for 3 years, though. That's for locking away your money for 3 years.
So it's money that you probably don't, if you don't feel that you'll need the money like in a short term, and then you can leave it somewhere for about 3 years, then it's definitely something to consider. So what would you say?
But they need to choose what term works for them.
Exactly, right? Choose what term works for you based on your own personal circumstances.
And obviously the rates will be lower the lower the term, essentially.
Yes. So what are the impacts on investing, for example?
Yes, so this is a huge one, investing. So the impact on investing would depend largely on what you've invested in, first of all, and what those investments, the underlying companies, are actually, where they actually make their money. Okay, so let's pick the FTSE 100, for example. If you have your money invested in FTSE 100, a lot of those companies are international companies. Although they're listed in London, a lot of their money is actually made in US dollars, made internationally. Around 3 and 4, around 75% of companies on the FTSE 100 actually make their monies this way, outside of the UK. So that money will be worth so much more once converted back into a weaker sterling amount. And so therefore investing in something in a fund, in an index like the FTSE 100 at this time will be quite interesting, because again you're investing into it with the view that then invests in companies that have access to an appreciating or stronger dollar currency. But if you compare that to something like the FTSE 250, which is massively localized and has a lot more of companies that are based in the UK, those companies will essentially struggle, because those companies now have to import goods with a weaker pound against a much stronger US dollar currency, which means that their cost of operating and things like that will be a lot higher, much higher inflation. So investing in something like that is a much more of a struggle, because those companies will need to in some way pass on those costs onto their customers. Now, it's worth mentioning overall that for people who are based in the UK, but who had US dollar based investments, like say you had money invested in the S&P 500, for example, the weaker pound actually works in your favor, which is going to sound weird to hear, but it actually works in your favor. Because if you go and have a look at, say, the S&P 500 on like Google Finance or Yahoo Finance or wherever, and you did a year-to-date look at it, you see something like this, a decline. In fact, you see around a 22.5% decline year-to-date, as at the time we're making this video, decline in the S&P 500 in US dollars. And this is referred to as a bear market, typically, right? However, if you looked at the same period in pounds, because of the fall in the pound against the dollar, the decline is actually more around 3.4 to 3.7%. So interestingly, the fall in the pound against the dollar has actually made up for people who are resident in the UK but with investments in America, has actually made up for a lot of the falls that the S&P 500 has had in the year. So this is a perspective of investing. A lot of people don't think about it. It's the currency perspective connected to their investment. So that's definitely worth mentioning. Now, what should you do now if you're somebody who's in the UK and thinking about investing? What should you go about doing? Well, you want to really invest in things, investments that where the underlying companies have income that they're generating internationally in US dollars. And you can do that by investing via passive trackers. So again, back to index funds and ETFs, that's one of the best ways to go about doing that. But if you're someone who's already, or you could even invest in addition to what I just mentioned. Again, I mentioned the FTSE 100 as an example of that, but there are other passive trackers and you can obviously explore, just look into a bit more detail and learn more about them. But obviously we've had falls in the S&P 500 and things like that, you know, over time. A lot of those underlying companies were overpriced anyway, overvalued anyway. But those falls, if you're someone who's thinking very long term, essentially is an opportunity from an investing perspective if you're thinking really long term. But if you're someone who is already invested and you are seeing declines in your investments right now, no matter where you're invested, our suggestion is that you should try not to sell now, because that really crystallizes that loss and that loss becomes real. Keep thinking long term, and if you can, if your budget allows it, and I know many people are struggling, try and dollar cost average to acquire more units, provided you are thinking long term.
Yes, the key word is long term.
So I feel like we've covered a lot there, and I hope today's video has been really insightful in sharing with you guys like thoughts on investing, you know, spending and things like that. I think overall what we're saying here is again, let's keep thinking forward. You know, please keep watching this channel. We'll keep you updated on what's going on in the economy, what's going on, you know, with, you know, local taxes, what's going on with investing, all those various things we talk about. Please keep on watching. We'll keep publishing our videos twice a week to keep you guys updated. But other than that, thank you. Thank you for watching.
Thank you for watching, guys. Share this video with someone who you think you'll find it useful. Definitely like and subscribe if you haven't done so already.
Yeah.
Take care, guys.
Take care.
Love.
See you soon on the next video. As always, guys, in all things, be thankful and seek joy. Take care, people. Bye for now.